In a notable shift in the financial landscape, Bitcoin and U.S. crypto stocks have experienced a significant rise propelled by a growing trend among public companies to acquire the leading cryptocurrency. On June 10, 2025, Bitcoin surged by 4%, reaching $110,150 as major firms continued to incorporate the digital asset into their treasuries, reflecting a broader acceptance of cryptocurrency in mainstream finance. The rally was underscored by positive performance from several crypto-linked stocks, including the four largest U.S. crypto miners and various significant crypto firms, all of which closed the trading day with gains. Notably, shares of Circle Internet Group CRCL, a stablecoin issuer recently listed on Nasdaq, rose by 7% to $117.79, with an additional 2.2% increase in after-hours trading. Similarly, Core Scientific Incorporated CORZ saw a 4.27% rise, while other players like CleanSpark Incorporated CLSK and Marathon Digital Holdings Incorporated MARA climbed over 3%. Continuing to gain traction after hours. The upward momentum in Bitcoin's price has been attributed to easing market jitters, particularly as diplomatic trade discussions were held between the U.S. and China in the UK. This context has contributed to a renewed investor confidence in the cryptocurrency market, with Bitcoin having recently broken through the $110,000 mark during the Asian trading session. Among the companies actively purchasing Bitcoin, MicroStrategy Incorporated MSTR stands out, reporting a 4.71% gain to $396.61. This trend of public companies acquiring Bitcoin is indicative of a strategic move to enhance shareholder value and leverage the asset's appreciation potential. For instance, Bitmine Immersion Technologies, which recently announced its first purchase of 100 BTC post a share offering targeting an $18 million raise, reflects the growing integration of cryptocurrency in corporate treasury management, despite experiencing a dip in its stock price by nearly 8.7% on the same day. Conversely, not all crypto-related firms have shared in the positive sentiment. Robinhood Markets Incorporated had faced a decline of nearly 2% as it missed out on being added to the S&P 500 index's status that typically boosts share prices. In contrast, eToro Group Limited Ether, which went public recently, surged over 10.5% and continued to gain in after-hours trading, highlighting the competitive landscape among trading platforms. The growing trend of public companies adopting Bitcoin as a reserve asset has opened opportunities for investors seeking exposure to cryptocurrency without navigating the complexities of direct ownership. This shift is part of a larger movement where companies like Tesla and Coinbase have utilized cryptocurrencies as financial hedges. While newer entrants focus on digital currencies as a core strategy for capital and value creation, the implications of this trend are profound. Companies that embrace a core strategy involving cryptocurrencies have seen their share prices often trade at significant premiums to their net asset values, indicating a robust appetite among investors for leveraged access to digital assets. However, this approach comes with inherent risks, including regulatory uncertainties and market volatility, which can lead to substantial fluctuations in both asset values and company valuations. As the cryptocurrency market continues to evolve, industry experts suggest that further regulatory clarity and institutional participation could enhance the stability of prices and investor confidence. The future of Bitcoin and the broader crypto market will likely depend on how effectively companies can integrate digital assets into their financial strategies while navigating the potential risks associated with this innovative asset class. With interest in cryptocurrency growing among institutional investors, the stage appears set for continued developments in this dynamic sector. As the cryptocurrency market continues to evolve, recent developments indicate a growing confidence among institutional investors in Bitcoin, driving a notable uptick in both Bitcoin and crypto-related stocks. On June 10, 2025, Bitcoin surged by 4%, reaching $110,150, signaling a recovery towards its previous peak of $112,000. This resurgence in value comes amid a backdrop of renewed optimism as public companies increasingly add Bitcoin to their treasuries, a trend that appears to be influencing market sentiment positively. The rally has not only benefited Bitcoin but has also buoyed various US-based crypto stocks. Companies such as Circle Internet Group, which recently joined the Nasdaq, saw its shares rise by 7% during the day, with a subsequent 2.2% increase in after-hours trading, bringing its value to $117.79. Other notable gains were recorded by Core Scientific, CleanSpark, and Riot Platforms, all of which experienced increases of over 2.5% on the day. This collective rise in crypto equities underscores a larger trend where public firms are increasingly viewing Bitcoin as a strategic asset. Amid this bullish sentiment, MicroStrategy, known for its aggressive Bitcoin acquisition strategy, also reported a gain of 4.71% in its stock price, closing at $396.61. Conversely, the trading platform Robinhood faced a decline of nearly 2% after failing to secure a spot in the S&P 500. Highlighting the volatile nature of the market and the impact of index membership on stock performance. The broader market dynamics reflect a significant shift, with Bitcoin's value driven by institutional interest. According to BitcoinTreasuries.net, the number of public companies holding Bitcoin as a treasury asset has reached 126, with these firms collectively owning approximately 819,000 BTC. This represents a 3.25% increase in Bitcoin holdings over the past month. The head of digital assets research at VanEck, Matthew Siegel, pointed out that the combined capital raising potential of major companies participating in Bitcoin investments amounts to $76 billion, signifying robust institutional support. Additionally, the recent activity from companies such as Quantum Biopharma further illustrates this trend. The Toronto-based biopharmaceutical firm announced an investment of $5 million in Bitcoin and other cryptocurrencies, reflecting a strategic pivot towards digital assets as a hedge against market fluctuations. This move aligns with a growing trend among firms seeking to diversify their investment portfolios and leverage cryptocurrencies' potential for capital appreciation. As Bitcoin continues to hover just below the $110,000 mark, analysts suggest that a decisive breakout above this level could reignite broader market interest. Current market conditions, influenced by the upcoming U.S. Consumer Price Index release and ongoing U.S. China trade discussions, may serve as catalysts for future price movements. In conclusion, the increasing adoption of Bitcoin by public companies signals a shift in market confidence that could have lasting implications for the cryptocurrency landscape. As institutional players continue to build their Bitcoin treasuries, the potential for Bitcoin to solidify its status as a mainstream asset increases. Observers will be keenly watching for further developments in the coming weeks, particularly as economic indicators emerge and more companies weigh their options in the cryptocurrency space. In a surprising twist, the realms of politics and cryptocurrency have aligned with unprecedented fervor, as former President Donald Trump and his family have increasingly intertwined their business interests with the burgeoning crypto market. This convergence was prominently showcased at the recent 2025 Bitcoin conference in Las Vegas, where a notable contingent of Trump supporters, including Vice President J.D. Vance and Donald Trump Jr., rallied around the notion that their political endeavors and the cryptocurrency landscape are intrinsically linked. During the conference, Donald Trump Jr. articulated a vision of unity between the free speech principles championed by the Trump administration and the financial innovations emerging from the crypto space. What's going on here in this very room? That's the financial side of everything we've been fighting for on the free speech side, he declared, encapsulating the sentiment of many attendees who see cryptocurrency as a battleground for personal and economic freedom. This alignment is further underscored by the emergence of American Bitcoin, a mining firm backed by Trump's eldest sons Eric and Donald Jr. Since its launch on April 1, the company has quietly accumulated a reserve of 215 Bitcoin valued at over $23 million, according to a recent filing with the Securities and Exchange Commission (SEC). The company's strategy isn't merely about mining. It is focused on long-term Bitcoin accumulation, indicating a shift in how the Trump family views cryptocurrency, not just as a speculative asset but as a cornerstone of their business portfolio. Bitcoin accumulation is not a side effect of ABTC's business. It is the business the firm stated, highlighting its commitment to transforming mining profits into lasting Bitcoin ownership. As the crypto market thrives, the Trump family's ventures are not isolated incidents but part of a broader trend where companies are increasingly positioning themselves as Bitcoin treasury companies. Trump's media organization, for instance, has announced plans to raise $2.5 billion to invest in Bitcoin, a move that aligns with the escalating interest from publicly traded firms in acquiring cryptocurrency amidst surging prices. Dylan LeClaire of MetaPlanet, a company transitioning from hospitality to crypto investment, remarked on this trend, stating, "This is a one-way train, nothing is going to stop this." Despite the optimism, the crypto landscape is fraught with uncertainty. The potential for a market downturn looms large, with many experts cautioning against the volatility that could accompany widespread adoption. Indeed, the financial implications of proposed legislation in Congress that could redefine Bitcoin's status as a security could significantly impact market dynamics. A recent filing from Trump Media acknowledged that new regulations could adversely affect the market price of Bitcoin and consequently the value of their own securities. As Trump allies in Congress push for bills that would classify Bitcoin in a way that benefits their business interests, critics are raising concerns over the ethical implications of such policies. Executive Director of Accountable.us Tony Kark argued that Trump's entanglement in cryptocurrency represents a misuse of political power for personal gain, asserting that congressional Republicans' crypto legislation is yet another abuse of power to help Donald Trump profit off the presidency. Looking ahead, the intersection of Trump's business activities and the cryptocurrency landscape is likely to evolve further, possibly influencing both regulatory frameworks and market behaviors. As more firms adopt Bitcoin into their financial strategies, the ramifications of this political and economic synergy will become increasingly significant. With Bitcoin prices fluctuating and regulatory measures in flux, the unfolding narrative of Trump and crypto will undoubtedly continue to capture the attention of investors and policymakers alike, signaling a new era where politics and blockchain technology become inextricably linked. On June 10, 2025, Ethereum ETH surged past the $2,680 mark, marking a significant increase of over 7% within a 24-hour period. This rally comes amidst robust trading activity, with daily volumes soaring by 114% to $26.5 billion, highlighting a strong demand for the cryptocurrency. Analysts attribute this price movement to several key factors, including record open interest in Ether futures, positive funding rates, and ongoing inflows into Ethereum exchange-traded products (ETPs). The momentum behind Ethereum can be traced back to the sustained inflows into Ethereum-based investment products, which have experienced a remarkable total of $1.5 billion over the past 7 weeks. According to data from CoinShares, net inflows reached $295.4 million last week alone. CoinShares head of research James Butterfield noted, "This represents the strongest run of inflows since the U.S. election last November and marks a significant recovery in sentiment among investors." Highlighting the shift in sentiment, the U.S.-based spot Ethereum ETFs, particularly BlackRock's iShares Ethereum Trust ETHA, recorded an impressive $52.7 million in inflows on June 9, contributing to a streak of 16 consecutive days of positive inflows totaling $890 million. Another significant factor fueling Ethereum's rising valuation is the record-high open interest in Ether futures, which reached $39.22 billion on June 10. This indicates that large investors are positioning themselves in anticipation of a price rally potentially targeting the $3,000 mark. The aggregate open interest saw an increase of 12.7% within just 24 hours. Notably, major exchanges such as Binance.io, Bybit, and BitGet account for over 51% of the market share, while the Chicago Mercantile Exchange holds 7.4% according to CoinGlass data. The bullish sentiment is further supported by positive funding rates in the ETH perpetual futures markets, which have risen significantly. On June 10, funding rates surged to 0.0070%, up from 0.0026% over the previous 48 hours. This increase suggests that more traders are betting on higher prices, which is reflected in the growing number of long positions in the market. From a technical analysis standpoint, Ethereum is forming a bullish cup and handle pattern which has been developing since early February. This pattern indicates a potential price target of over $4,100. Contingent on breaking through key resistance levels. Michael Van de Poppy, founder of MN Capital, noted, "I assume we'll start to see a leg to $3,400 to $3,500 if it breaks the resistance at $2,800, suggesting that a decisive close above $2,739 could pave the way for a significant rally." In addition to these technical indicators, Ethereum's staking activity has reached unprecedented levels, with nearly 30% of the circulating supply now staked. As of June 10, the amount of staked Ether hit a new record of 34.65 million ETH, reflecting a growing trend among holders who prefer to stake their assets rather than sell them at current price levels. This interest in staking is further buoyed by expectations regarding the approval of spot Ether ETF staking by the U.S. Securities and Exchange Commission, which could attract even more institutional investment into the ecosystem. The confluence of these factors paints a bullish picture for Ethereum's future, suggesting that the cryptocurrency is on the cusp of a significant upward trend. As institutional interest continues to grow and technical indicators reinforce positive sentiment, the Ethereum community is optimistic about the potential for the asset to break through resistance levels and achieve new price highs in the coming weeks. This rally not only underscores Ethereum's resilience but also its evolving role as a foundational element of the decentralized finance landscape, paving the way for broader adoption and utility in the digital economy. In a significant move that underscores the evolving landscape of finance, Société Générale has emerged as the first major bank to launch a US dollar-pegged stablecoin, marking a pivotal moment in the integration of digital currencies within traditional banking systems. On June 10, 2025, the French financial institution announced the introduction of its new stablecoin USD CoinVertible USDCV, which will operate on the Ethereum and Solana blockchains. This initiative is part of Société Générale Forge's broader strategy to embrace cryptocurrency and enhance its offerings to clients. The stablecoin will be backed by assets held in custody by the Bank of New York Mellon, positioning it as a reliable instrument for various financial transactions. Jean-Marc Stenger, CEO of Société Générale Forge, emphasized the importance of this launch, stating, "After the release of a MiCA-compliant Euro stablecoin EURCV, the launch of a US dollar version was the obvious next step for Société Générale Forge, as market adoption of stablecoins is growing exponentially." This statement reflects not only the bank's commitment to innovation but also the increasing acceptance of stablecoins in the broader financial ecosystem. USDCV aims to facilitate seamless access to the stablecoin market, enabling 24/7 conversions between fiat currencies and digital dollars or euros. The ability to conduct real-time settlements in both US dollars and euros is expected to benefit a wide range of applications, from crypto trading to cross-border payments and on-chain settlements. The versatility of USDCV and its European counterpart EURCV positions them as valuable assets for institutional, corporate, and retail investors alike, although neither stablecoin will be available to US residents at launch. The global stablecoin market has been gaining traction, driven by increased regulatory clarity and a growing appetite for digital currencies. A recent report highlighted that $94.2 billion in stablecoin transactions were settled between January 2023 and February 2025, showcasing the rising demand for these digital tokens. Countries like South Korea are advancing legislation to pave the way for local stablecoin issuance, while major tech firms in the U.S. are exploring the integration of stablecoins into their services. As financial institutions increasingly recognize the potential of stablecoins, Société Générale's initiative reflects a broader trend of banks adapting to the digital age. The integration of USDCV into mainstream finance could set a precedent for other banks to follow, enhancing the efficiency and accessibility of financial transactions. Furthermore, the move may encourage further regulatory advancements as governments and financial regulators work to create a framework that supports the safe and responsible use of digital currencies. Looking ahead, the anticipated launch of USDCV in early July 2025 will be closely watched by industry stakeholders and investors alike. As the stablecoin market continues to mature, the success of Société Générale's offering may influence the future trajectory of digital currencies in traditional finance, potentially transforming how transactions are conducted on a global scale. With the ongoing evolution of cryptocurrency regulations and market dynamics, the developments surrounding stablecoins will undoubtedly remain a focal point in the intersection of finance and technology.